available evidence. So as we've seen, when it comes to stamp duty, it's been clearly stated in the Finance Act that it's the responsibility of the FIRS. There's this argument between who takes care of stamp duty. Is it the FIRS? Is it NIPOST? But it has clearly given the NIPOST, I mean, FIRS have been given a mandate at the federal level to collect. Similarly, the State Internal Revenue Services have given the mandate based on the Finance Act to collect for state government when it comes to transaction dealing with individuals. Now, the stamp duty came into effect because of the Ordinance 41 of 1939. The language of the act is invariably dated and was difficult to understand for the average taxpayer given the age of the act. So the Stamp Duty Act started, and this act was not even touched. It was not amended like any other act because most of the time, as at that time, it wasn't a digital age that people enter a lot of contracts. Now we have cryptocurrency, we have forex, we have digital assets, we have a lot of financial instruments. We have so many of them, but as at that time, it was paper based and there are some things that require stamp duty, okay, and the scope was not broad. But now, stamp duty generated a lot of money for the federal government last year. In fact, the focus now is on stamp duty. The focus is on stamp duty. Now, the difficulty in understanding the Stamp Duty Act has sometimes led to the uncertainty regarding the applicability of stamp duty to various kinds of instruments and transactions in and who has the sole responsibility of collection of stamp duty. So we have a lot of transaction and different rates for stamp duty. Stamp duty could be at a fixed percentage or based on the value, ad valorem. And different transaction, different financial instruments at different rates. And of course, we'll be looking at the act in the course of the academy. Now, but it's very important to know that the act started in 1939. Okay. Now, similarly, the recently gazetted Finance Act 2019 has amended Section 41 of the Stamp Duty Act, contained in Section 8 of the Law of Federal Republic of Nigeria 2008, to give the FIRS the sole right of collecting the stamp duty on behalf of the federal government. So basically, I've mentioned this that the federal government, the FIRS, has been given authority to collect stamp duty. Now, the Finance Act introduced some amendments to the Stamp Duty Act, and they are summarized as follows. Now, I've said it that FIRS is the only valid authority empowered to impose, charge, and collect stamp duty in respect of documents relating to matter between a company and an individual, group, or body of individual. Likewise, the State Internal Revenue Services have replaced the state government in respect of document executed between individuals or passing at such rates charged that may be agreed with the federal government. Now, FIRS has the power to collect stamp duty. That's very, very key there. So the aspect to be looking at in the new Finance Act is instruments. I told you about instruments. Definition of instruments has been expanded to include electronic documents, and the definition of receipts amended to include electronic inscription. So instruments in the Stamp Duty Act of 1939 was given a narrow definition, but now we have electronic documents. Electronic, we do a lot of, in fact, email, simple email that you send. If you want it to be legalized, you can you just have to pay stamp duty on it. Yeah, you are exposed to stamp duty just by sending a series of email. So if you look at it, you are sending mail, correspondence, because they fall under electronic documents. Now, the Finance Act has imposed obligation on bank to charge a duty of 50 naira on all intra and interbank deposits and transfer from 10,000 naira and above, with the exception of transfer between two accounts maintained by the same person in the same bank. However, the Finance Act of 2020 have changed it to electronic money transfer because this is creating a lot of issue between the states and the federal government. When it comes to transaction between myself, Mr. A, and Mr. B, you expect that the stamp duty should go to the states. But maybe during audits, FIRS will say, oh, they should be the one to collect the stamp duty, that after all, it will be shared between the federal, state, and local governments in the long run. But now there's a simple charge known as electronic AMT, money transfer charges, that will be paid into an account. And when it's paid into the account, the federal will get 15%, while the state and local governments will get 85%, shared among each other. Okay, so this is the amendment in 2020 Finance Act. You can see that the issue of flexibility, has been incorporated in our tax space as one of the canon of taxation. Okay. Now, the Finance Act 2019 deletes Section 90 of the Stamp Duty Act, which exempts receipt of monetary deposits by a bank from stamp duty, but provides exemption for the following. So before, when you look at the Finance Act of Section 90 of the Stamp Duty Act of 1939, it was if you any transaction between bank was not exposed to stamp duty, but because of revenue generation, there's COVID, the government still need money. Okay, of course, when it comes to money, is another issue for discussion when it comes to budgeting and spending taxpayer money. But looking at the budget from the face of it, the government still need money, and they have to introduce, remove the exemption that you and I enjoy when we do transfer to and from each other. Okay, and we are now exposed to the stamp duty charges that we see anytime we receive money from individuals or from companies. Now, but the act exempts receipts by given by any person in a regulated security lending transaction carried out under regulation issued by the Security and Exchange Commission. It also exempts all documents relating to a regulated security lending transaction carried out under regulation by the Security and Exchange Commission. It exempts share stock and security transferred by a lender to its approved agent or a borrower in furtherance of a regulated security lending transaction. Share stock security returned to a lender or approved agent by a borrower in pursuant to regulated security lending transaction. So the government is trying to encourage the capital market, Nigerian capital market, and to encourage security lending in the capital market. So transaction that revolves around security lending from an approved agent is not exposed to stamp duty. And that's why you should see that Nigerian Stock Exchange did well 2020. One of the highest in the world, over 700% return on investment in terms of capital appreciation. Very well. And even in January, it's still doing well. So these are some of the offshoots that we are seeing in the fiscal space, in the Finance Act, trying to support equity sector in the Nigerian stock exchange. So I